Hello everyone, it's Friday, November 7. Today we'll analyze the euro and British pound charts to identify potential market trajectories. The euro has managed to extend its gains against the US dollar, with the pound sterling following suit. Despite recent statements from Federal Reserve officials emphasizing the need to combat inflation and return it to the target level, which raised questions about the possibility of a December rate cut, traders have largely ignored these signals, refraining from rushing to buy the dollar or sell risky assets. Yesterday, all eyes were on the Bank of England's monetary policy meeting, where the regulator opted to keep interest rates steady at 4%. A key point of interest was the voting arrangement. Only 5 policymakers, including Governor Andrew Bailey, voted to maintain the current rate, while the market had anticipated a larger consensus for this stance. Bailey indicated that rates could be lowered next month, emphasizing that future adjustments will depend heavily on forthcoming inflation data. Recent statistics have shown signs of easing inflation, but Bailey cautioned that this might be a temporary trend. If upcoming data confirms cooling inflation, the BOE may not need to keep rates elevated. This could potentially provide much-needed relief to the Prime Minister and the Finance Minister as they work to address financial shortfalls, which are currently the primary concern weighing on the pound sterling. Notably, the budget announcement is scheduled for November 26. Turning to today's macroeconomic calendar, it includes trade balance data from Germany and France, as well as the UK House Price Index. While these reports are not expected to significantly impact market sentiment, any readings that exceeds market expectations could bolster the euro and the pound in their bullish run against the greenback. Due to the ongoing government shutdown, today's calendar lacks key data on the US labor market. As a result, market participants are likely to redirect their focus to the University of Michigan's survey, which provides insights into consumer sentiment, inflation expectations, and current conditions. Anticipation of the university's report could increase market volatility as positive data may revive demand for the US dollar. The greenback's recent correction against both the euro and the pound has been notable, meaning that even without favorable statistics, the bullish trends of the euro and pound could be at risk of reversal. In addition, speeches from Federal Reserve officials John Williams and Philip Jefferson, as well as Bank of England chief economist Hugh Peel and ECB policymaker Joachim Nagel, are scheduled for today. Their comments could provide valuable insights for traders making decisions in this uncertain environment. Now, let's move on to technical analysis. The 1-hour EUR USD chart indicates that a decline followed by a false breakout at 15.21 would generate a buy signal, driving the euro up to 15.51. A break above this level will push the pair to 15.78 and likely open the way towards 16.06. At this level, I would recommend going short on the rebound, targeting an intraday correction of 25-30 pips. Short entries at 1.1551 and 15.78 could be considered on a false breakout, with the target set at 15.21. If the price breaks through this level and holds below it, the euro could drop to 14.94 and even extend losses to 1.1472. At this mark, it would make sense to open in long positions on rebound, expecting a 20-25 pip move. Long entries at 14.94 and 15.21 would only be relevant in the event of a false breakout. As for the British pound, a false breakout at 13.98 would present a buying opportunity, with bulls likely driving the price up to 1.3139. A break above this level would lead to a rally toward 31.79 and possibly open the path to 32.16. At this mark, it would be wise to go short in the rebound, targeting an intraday correction of 30-35 pips. Short positions at 31.39 and 31.79 could be considered on a false breakout. Given that the bearish market remains intact, entering the market on false breakouts could aim for a decline back to 1.3098. In case of subdued buying activity, a break in consolidation below this level would likely drag the British pound down to 1.3056. The most distant target would be 3013. At this level, I would recommend going short on the rebound, anticipating a move of 35-40 pips. Long entries at 1.3056 and 3098 would only be prudent following a false breakout. Good luck to everyone. Have a great weekend.